Hello everyone, George DeSantis here with a look at the market. Now I didn't do one of these videos last weekend. I hope to do one this coming weekend, but I thought I was looking at some charts and I thought I'd like to share them with you, so we'll put them on the video on YouTube. But before we begin, we usually bring up a disclaimer, so let's do that. Take a look at it. It simply states that I'm not a professional investment advisor. I'm a psychologist. I do this for my own purposes. Put it on the video. Those who care to take a look can do so. And that's basically it. We'll review the general market, and then I'll take a look at some individual stocks that I've been looking at. Now it's about 12:30 on Thursday, so Thursday the 12th. So we don't have end of day data here, so bear that in mind. However, here's a weekly chart of the S&P 500, and we've been discussing this trading range. Not just we have been doing, so many other people have been pointing out this trading range that the market's been in for a while. But recently you can notice that we broke above it here. The parabolic is now below these bars, especially the most recent bar. So this market now is now in an uptrend. We still have resistance up here at this level, so we're bumping up against the previous resistance, and we'll see how it handles that. But as I often do, I want to take a look at the moving averages, and you can see the 4-week moving average above the 9-week exponential moving average, and that is above the 30 weighted moving average, and that is above the 50-week moving average. So if insofar as moving averages goes, you can see that we are definitely in an uptrend here. Parabolic is indicating the same. We're approaching the previous resistance, which is also pretty close to 2 standard deviations. So we shouldn't be surprised to see some slowing down of this momentum or some resistance here and a minor pullback. But notice that as we speak, the market is now at, the S&P is now at 3,011, and that augurs well for the bullish scenario. Well, let's take a look at the daily chart. So on the daily chart, you can see again, looking at the moving averages, you can see the 4 cross over the 9 here, way back here, which was around August 29th. And since then, it's remained above the 9 exponential moving average. And you can see these 3 moving averages, actually 4 of them, one above the other, smaller term, the shorter term ones above the longer term ones. So back here, we had the parabolic switch to a bullish indication, in other words, an uptrend. And you can see that that's been the case for a while. So the market has switched to a bullish personality, if you wish. If you look at some of the other indicators like MACD histogram, you can see that we had this bullish divergence of MACD here, and Williams per centaur crossed above that magenta line, that minus 50 line back here, where this new trend seemed to have started. And as far as RSI 12 is concerned, it continues to remain above the 40% line, that yellow line, since it crossed above it here. So it looks as though we're in an uptrend here, of course, and some stocks are beginning to rally again. Others are pulling back. There's some rotation going on, as many of the talking heads been pointing out. So let's take a look at some other things. Now, staying with the theme of the general market, here's an ETF of the SPX, of the S&P 500, SPY, as I'm sure most people are familiar with. And you can see here that we broke out of this trading range, but now you see we're approaching this upper dotted line here of the channel. Now it's possible to ride it up as we did here, but bear in mind that this is going to pose, at some point, it's going to pose some resistance. Now notice money flow has increased again, and the market is now becoming more overbought. So the overbought line is now crossing above 70, it's crossed above 70, and so the market's becoming overbought. It is overbought. So not surprising if we see a little bit of a pullback here, but I wouldn't I wouldn't say that we could expect a big pullback. I think it's going to be just a little bit of a pause. Here's a best choice chart of the SPY, and you can see this trading range here. We broke out. We're now approaching the overbought line here, which is at 90% line. So on the extreme lines, we are now approaching overbought, but we still have room to run. Here's a chart from stockcharts.com, which we've looked at many times before. It shows us the percentage of stocks above of this S&P 100 above their 200-day moving average, and you can see that since we made this bottom here, that it actually has been increasing. So the number of stocks rallying above it and moving above their 200-day moving average on the S&P 100 is increasing. And here's another chart we've looked at before, and I pointed it out the last time I did the look at the market. The fact that, as my friend Alex Elder pointed out, back here, when you cross above, when you come down and cross below the minus 400 number here, and then you cross back above it, you get a nice big rally, and that's what we got in June and July. And now you can see that we did the same thing here. We crossed below the 400 minus 400 area here, and now we rallied above it, and so we are getting this uptrend here, this rally in the S&P. Now lots of people look at the VIX because the VIX it measures the volatility in the market, and you can see that it's now at 14.25 as we speak. Of course, it keeps changing because the market is open at this time, but it's around 14, a little over 14. Now, Larry McMillan always points out that when the VIX drops below 16, about this level here, it is time to be more bullish. In other words, you should be buying stocks when the fear index is below 16. Sometimes the VIX is called the fear index. So right now, there's a minimum of fear. The other thing to remember is that the VIX is very useful in terms of, at least one way of looking at it is that when VIX is high, makes a high, and starts declining, the market being an inverse, having an inverse relationship, market tends to be moving higher. And that's insofar as the VIX is concerned. Here's a chart showing us the Ishimoku cloud, and this is the cloud here. Now, I won't worry, I can't go into all the details on the cloud, but it's sufficient to note that once price bars are above the cloud, the market tends to be bullish. So on the weekly chart, prices have been above the cloud since around this area here, since April, been above the cloud. But on the daily chart, notice that prices fell within the cloud when we were in this trading range here, and now we're breaking above the cloud, and this is consistent with this uptrend that we've been describing. Here's a daily chart of Apple. I sent you an email about Apple some time ago. I bought it, as I said, I bought and I added another 1,000 shares. In any case, you could see here that this triangle price broke out of the triangle, and I calculated a target of $239.24, $239.24. Based on this triangle, you take the high of this minus the low of B, and then you add that price, you add that difference onto this level here, which was about 210. Okay, so we get 210.45 added to 28, which was the difference between these two prices, the high here, the low here, and you get a target of 239. Now, it doesn't mean we're going to hit the target. It's a target, which is as any other target goes. You aim for it, but doesn't necessarily mean you're going to hit it each time or even at all. But it's a guideline. So here we go. We are riding the upper Bollinger Band. We are way up there now, above the two standard deviation line. So it's not surprising if we see a little bit of a check, a little bit of a pullback, but it's looking pretty bullish here. You can see the moving averages split here. The alligator is opening its mouth, as some people call it. The alligator is opening its mouth. You got to feed it. In other words, you got to buy it. So that's as far as Apple is concerned. Got a nice gain on it so far. Following it up with stops below the lows, okay, below the previous low, below here, and then move it up here, and we'll see how far it goes. Here's another stock that I just found that I'd like to take a look at. So this stock I've owned for a while, Microsoft, and you can see that it's been a sort of a trading range with the rest of the market, but it's formed an ABCD triangle, and I calculated a target of 151.18 from this ABCD triangle. In other words, the high of A minus the low of B, and added on to the difference on to this one 140.28, and you get 151.18. Again, it's just a target, but I still continue to hold it. Interesting to note that we had this bullish divergence here. We have this nice bears were getting weaker, even if it ain't a classic divergence. Bears were getting very weak here, and now bulls are getting stronger. You could see it reflected in the bullish histograms of the MACD. The other thing I noticed that Williams percentile seems to be hanging out above this magenta line more often now. Yeah, excuse me, I was coughing a bit. I had to take some water, drink some water. In any case, let me continue here. You can see that the Williams percentile is sort of hanging out for the most part above this fifth magenta line, this minus 50 magenta line. Let me get rid of these here. And you can see also that since RSI 12 crossed above the 40% line here, it's remained above it, so indicating that there's strength here. So I like Microsoft, and you know the target is 151. We'll see if it gets there. I might even add to my position. We'll take a look at iPay, another one that I continue to own, because I like the payment systems. They've been sort of in a trading range for a little while here with the rest of the market, but and that's true. Since August, you could see this trading range here, and it pulled back more recently again. But I'm holding this. I like the whole idea of the payment systems, and right now you can see that it's working its way back up again, at least at this time. Now let's take a look at some shaken charts for the few minutes we have left. This is Zoom. I had to sell it. It hit my sell criteria, and so I got a loss on this one. It has a very good system for video conferencing, etc., and is very popular. But when it hits your sell criteria, I get out. So I took a loss on that one. Let's take a look at some of the other ones we have here. Let's see. At some time ago I owned Comcast, but I don't own it right now. But you can see that it's been making a new high. Synopsys is another one that I owned and I sold it, but I might continue to take a look at it, because if it comes down to the oversold region here, I might go back into it. If you look at XLK is that ETF of technology. You can see that it's in that overbought region, but there's some money coming in here. You can see that it follows the general market pretty much, coming out of this triangle here, or somewhat of a trading range anyway. And what about Adobe? Adobe dropped below the 200-day line. That's not good. So I don't own it anymore. Of course, you can see that MasterCard took a little fall here recently, but it's not something to be concerned about, I don't think. And Visa likewise. They're both up today a bit. So Visa is up a little bit again today. Well, we have to close here. We don't have that much time left, and have a good weekend. upcoming weekend, we'll do another one.